All right, thank you everyone for attending another module of real estate investing. And my name is Wing Yi from the Yi Real Estate Network, and my special guest is Maureen McCann from Spartan Invest. And today's topic is builders are not building or they're not constructing new homes, and sellers are not selling. What gives? We have this two important concepts colliding, right? Sellers are sitting on their homes, many of them with they're locked into a 3% interest rate, 30-year fixed rate mortgage. They have very little incentive to sell. They have very little motivation to sell because right now the mortgage interest rate is around 5.5 to 6%, give or take what day of the week it is. And then builders, they are trying to get rid of their current batch of homes that already completed because of the decreasing demand as a result of the interest rate right now. And they're finding a less pent up demand from the buyers. So they need to get rid of their inventory of new homes. They're providing some incentives and some discounts or whatever. So get rid of, so they can close out their books for the year, those builders, those national builders. So, and then because the builders' intention to build more homes down the road is based on the demand, based on the current demand. Since the current demand has subsided drastically, and then the home builders' confidence level, if you watch it, has decreased drastically in the past few months. So they are not constructing new homes for the at least for the foreseeable moment. So that could exacerbate. Can we see this right?
Exacerbate.
That's why I have you on
my for you today,
podcast. So that'll create potentially down the road of not enough new homes available for the future demand of home buyers from the builder side. And then I already mentioned about the home seller. So when you have right now, you have uh, uh, low sales activity, sellers not selling, and builders not building. I mean, these two.
We have a bigger problem coming.
So, yeah. So what do you make of it? I mean, this is confusing, to be honest with you. So what do you think is going on?
Well, what I think is going on is you have, I mean, think about it. If you were, let's step in the shoes of a home builder at the moment, right? So you and I, we own a company and we're building a bunch of homes that we plan on selling. And we were selling them very quickly when the interest rates were, low because you could buy a bigger house for less money, right? Because it was cheaper to borrow. And as borrowing costs have gone up, then that scares people because they basically buy the house not for the price of the house, but the monthly payment. And if they can't afford the monthly payment because it's too tight, then they're just gonna not buy at the moment. So you and I are a home builder. We have a bunch of houses in permitting. We have a bunch of houses that we've already started. We have to close out the books by the end of the year. And we still have to show a profit, right? As a company. Otherwise, if you're not profitable, you go out of business. So, it's kind of this, it's this delicate balance that we're in, and it's uncertain, and people are just trying to figure out, both home builders, investors, home buyers, and sellers, right? It's like, what do we do? And home builders, the ones that they've already built, they have to sell. Like you said, they're going to give incentives to be able to move that product, or to give some incentive for maybe someone that's sitting on the sidelines, a buyer sitting on the sidelines going, should I do this? Should I not do this? It's like, yeah, but they're giving us, $10,000 seller's credit, and they're paying our closing costs and whatever other incentives are going. I'm just making that up. I have no idea what they are right now. And so that's something that you and I, as home builders, we're willing to give away to move the product, right? That's what we're willing to do. And the people that have homes right now, see, when you nailed it. People that have homes right now that locked in, refinance and locked into rates below 3%, they're not selling, because if they sell, and they want to buy something else, that means they've got to go into an interest rate that's higher than what they've already secured. So it would just make sense for them to whatever, keep their existing house, stay in it, or if they want to either downgrade or upgrade, they could, rent if they wanted to. I just think most people are staying put. So when you're saying sellers aren't selling, that's one of the reasons. They've got historically low interest rates. They're locked in for a long time. These properties aren't coming back on the market. And then you've got the home builders that have to sell. They're the ones that are in permits that they're not even going to start constructing yet because they've got to move their current inventory. So here is what I see happening. And I've seen two different reports. I've seen one say we're $3 million homes short in the United States. I've seen another article that says 5 million. I don't know which the number is, right? It's a large number, but that is today. We are in a deficit of housing needs today in the millions. You can choose which number you believe, 3, 4, or 5, I don't care, right? Or do your own research and find out your own number, but there's definitely a massive demand for housing. Massive demand for affordable housing and not enough supply. And then you have builders who were building to try to meet the demand, and now they're slowing it down. So this just means that pent-up demand that was present, doesn't mean it went away. The pent-up demand that was for housing when the interest rates were much lower than they are right now by 2 points, that pent-up demand is still there. They just have to go do something different until the affordability piece comes back into play. So if you've got housing starts dropping and the pent-up demand has been, it's kind of moving like it's like a snowball going downhill, becoming bigger and bigger and bigger, right? You still have the pent-up demand, you still have the needs for housing, and you've got a bigger problem on the horizon, which is we are just not going to be able to catch up really soon. So that is good that translates into being good for real estate investors, in my opinion, because a lot of those people that want to buy that can't buy are going to need a place to live, so they will rent until they can buy. That gives us an opportunity to be able to house people until the market conditions change and they're positioned again to purchase. But there's not enough supply right now. And as the supply is diminishing because the lack of continuing to build, then we just have even a bigger housing crisis coming.
You know what? I will further that thought, and I'm very, very optimistic and very bullish. So what we're seeing right now, if this trend continues, if the builders not building enough homes and sellers are sitting on their, locking at the low interest rate mortgage. So we're going to see some even worse housing shortage than we have experienced during the pandemic this past 24 months. And if the interest rate stays around 6% or maybe 5.5%, I think some buyers will come back into the market. May not be next few months. It could be the early part of next year. But if the interest rate decrease a little bit to like 5.5% to 5%, I believe we can see much more buyer activities. So no matter how you cut it, right now we are still at a historical low supply of homes, and we still have pretty moderate demand out there. So when we see this is economics 101. Economics 101, if demand is greater than supply, housing prices will increase. So let's look at the worst case scenario. Some people, again, the negative headlines are just conditioning and program so many people out there into paralysis of fear. Now, let's go over the worst case scenario. What if there is a recession impending coming? What is the recession really happening? What if worst case scenario? Here's the bottom line: as real estate investors, even if the market goes bad, even real estate wise or economy wise, and if there's a recession, whatever, people still need a place to live. People, they're not going to be buying homes. They will increase the rental pool of people going to be even higher than it is right now. And right now we are already at a historic renters nation. So the landlord of this world, the real estate investors of this world, they're buying investment homes to rent out to others. We are sitting pretty. It doesn't matter how bad the economy is, how good it is. You can find a renter. People have to live somewhere. There's a shortage of homes to live everywhere in the country. Amazing shortage, acute shortage of homes to rent and to buy. So risk investors are the only main winners in this current economy right now. So that's my takeaway from this video. So what are your thoughts? What's your final thought?
Well, you give me some ideas here, and so and I know you want me to be quick because we always like to keep these short. But you did say the R word, so I am going to talk about it. We are in a recession by definition, and so it's a weird one, but it's one that I have learned just through my recent studies here that the Fed's monetary policy puts us in a recession. They do this on purpose, right? And some data that was really interesting to share is the Fed's track record. I'm cheating looking at my notes, okay? So the Fed's track record for the last 61 years, the Fed has raised the interest rates 9 times to kill inflation. And they do it, the Fed's track record is awesome because all 9 times they indeed were successful in bringing down inflation. Their track record of avoiding a recession while killing inflation is abysmal. So this is true. They managed to do it once in 1986. What the Feds really should say is we're putting the economy into a recession to avoid hyperinflation. So this is what they are doing. Now, they use this term shallow, which I think makes a lot of sense here. Every single one of those recessions that was created just because inflation was getting out of control was a shallow recession, which basically meant the trend line that you were on as an economy goes off course for a little bit, you have the dip, and then you come back to your original trend line. That's a shallow recession, usually lasts about 9 months. You could see it maybe a year and a half. So, but none of them historically, with the last 9, none of them have lasted more than 9 months. None of them felt like in 2008, and none of them left any lasting damage to the economy. So if we look at history and what the Fed has done, and the Fed will take us out of recession. Monetary policy puts us in there, slows the buying, they take us out, and lower interest rates, they increase the buying again, because every recession, usually interest rates go down because they need to stimulate the economy again to get people buying again. And this is how this thing works. So whether you buy now and say, and you provide housing for people and then you lock in at a 5.5 or 6%, and then you can refinance maybe even next year or 2024 at 4% or whatever, less than what your borrowing costs are now, then you still win from a real estate perspective, because not only do you have the hard asset that is increasing in value year after year, some years better than others, but nonetheless, you're getting that equity growth. And then you got a renter in place that is paying down your principal and putting monthly cash flow in your pocket every single month, and you get to take the deductions on your tax schedule. So like I said in a previous podcast, the fundamentals are the same. So what might be a little different right now is builders aren't building and sellers aren't selling, right? That's just right now. So you have to decide for yourself what makes sense, and facts don't lie.
Wow, you cover so much from a high level recap. It's just a lot of yeah, it's amazing. That's really you said it all.
I'm trying to impress you, Sealing. Is it working? I'm trying to impress you.
You impress me, all right. Oh, well said. There's really nothing more I need to say. It's just so right now is a great time to invest in real estate amid all the chaos, all the crisis. And for you folks out there, you listening to this video, it's just you have to just overcome all the fear or the doom and gloom negative media out there. Just look at the true data and facts and trends that are clearly defined in nice way by Marine, and just overcome fear, take action, invest for the long term, and you'll be fine. So that's it. There's nothing more need to say. So Maureen, thank you so much.
Thank you guys for listening.
For a great perspective. This is Siwin Yi with Maureen McCann. Have a nice day. Bye-bye.
Bye.